Hello and welcome and welcome and hello and welcomes, greetings, salutations, good afternoon, happy Thursday. Hope everybody is having a great one. It is me, it is I, it's Danny Deals, it's Poco, Moss, of course, presented by the great Hurricane Lopez. Let's see what Not a Lurker wants. He's calling me on the bat phone. He's hacking me again. He's probably no, I don't. I am not. I only love Princess J. That's it. The rest of you guys are freaking ugly, smelly turds, and I can't stand any one of you, but I still appreciate you watching. Thank you for tuning in to Poco, Moss. Sofi Stock back up toward that 650 price again, sitting. Let me share my screen here, guys. Don't sub and like, don't listen to Not a Lurker. So all the way down today, guys, to 629. Probably hit some stop losses there, pushed down at a 30, 35 degree angle, then just this extreme upward movement. Let me just show you that one day. It's just such a weird chart here. And then just this accumulation, then just back to the algo. Absolutely locked on. But the narrative they want you to believe, guys, is that the stock is absolutely falling apart and that it's going to fall back, to $5 and you should sell now and buy back. Sorry guys, one sec. Have to take care of a little bit of business anyway. So I wanted to talk about a couple of things. Again, it's my old narrative, sort of the reality versus what they're making up. Remember, the Chia Pets of the world were saying SoFi is going to have to do a bad money raise toward the end of 2023. It's going to push it down, could be reverse split. All these things, they just didn't come to pass. So with every single ER, SoFi continues to grow their earnings, continues to grow their members, continues to grow deposits rapidly. I believe they're continuing to execute on this big tech pivot, sort of taking Galileo from just this sort of small company dealing with small bit players to a major company incorporated with Technesis and with SoFi Bank, offering a full suite of features. Banks make money. That's the thing. These bears present narratives like, well, you remember that curly-headed freak Gary? He's like, well, it's a big problem. They're bringing in so many deposits. They have to do something with that money. It's a liability. Hello, McFly. All banks want to bring in deposits. That's what they do. That's what drives them. The multiplier effect of that money, they're able to keep a small amount in reserve, make many times that in loans. Look at the net interest margin SoFi enjoys compared to any other bank. And then you start talking about the fact that they're digital native. What people are just, Gary kind of made the point, some of the bears do, but they make it in sort of a, unfair framing, is that SoFi is in its infancy and the execution has been absolutely incredible. The growth has been extremely stable. In any rational world, SoFi is worth way, way more than a firm. What's the difference? A firm loses a bunch of money. Their business is basically smoke and mirrors, this modern AI credit. They're doing installment loans. They're a payday lender for people who can't afford what they're buying. That's what it is. SoFi's customers are, up and coming future wealthy people who are going to have a huge lifetime value. These aren't people trying to put their Walmart groceries on installments. These are people that need personal loans to grow, to run their lives, to manage their finances. These are not desperate people. SoFi is a far better company than for me. The market cap is so much lower. Why? Because institutions own 85% of a firm and they only own, 45% of SoFi. That's it. As that starts to equalize, you're going to see SoFi make its run. Why is this stock breaking down to 5? Nobody can explain it to me. I've been saying so much of this is shorting. Look at yesterday, back to 62%. We haven't seen these levels in 2 weeks. And they don't want to let go. And that's all they're able to do is hold it here. Yesterday the stock didn't, it broke down a little bit at the end. And they were talking about some institutions selling, but, where's 5? I don't see it. I could be when people are like, well, you said it wouldn't go below 7. Shorts can take this thing wherever they want. Look at what's happened to the short. I don't have billions of dollars or hundreds of millions of dollars, guys, to prop the stock up at 7. I mean, I can buy a few thousand shares. I can do the best I can. But I mean, you're talking about 260 million shares on loan, which was just under 200 million. I mean, this was 210 million just end of May. It was 220 million June 15. So you've added almost 40 million shares to the short in what is that? 3 weeks, 2 weeks? And then the short interest 18.55 days to cover now pushing up over 6.5. I mean, this is a very dangerous short if this ER is a big beat and they do a huge guidance raise. What if they have approval for business banking, business lending in their back pocket, and that's not in guidance? 2025, 2026, and that's going to be a major contributor driving revenues and profits. Think about the guidance raise. There's not a lot of businesses where you can just add these big components, these big pieces totally unexpectedly to your business. What if they add options all of a sudden, full options? I know that's not going to be a huge profit center, but it's going to make a difference on guidance. So there's these different things, you can expect. Anyway, live short interest, guys. Haven't even looked at this. Looks like they're, returned 3.4 million. Yesterday, they returned 2 million. So it looks like the shorts are backing off. I don't buy this at all. Cost to borrow average still at 1 min. So it's not going negative. Plenty of shares are available. In terms of the overview, one thing you notice is on days they want to keep it down, they're just push volume to a bare minimum. Last 2 days traded 30 million shares. Today we're talking about a number right along the same. Market just closed, actually, so it's 2 minutes past the top of the hour. Of course, we got that short day tomorrow for the 4th of July Eve. So we'll have a short trading day, closed Thursday, back open on Friday. We've got data coming out. So we could see some extreme volatility on Friday. We could see some extreme volatility tomorrow. It's just hard to say. I mean, high interest rates have been pretty good to SoFi in many ways. I think when they lower interest rates, it's going to, absolutely explode demand for home loans, student loan refis. I think the demand for personal loans will be there, but with the economy, heating back up, SoFi is going to be able to afford to be very, very selective on who they loan money to. Tanner did a good video on, could credit cards be the next growth driver, because it's such a minuscule percent of SoFi's business. And if managed properly, credit cards can actually be a really good business. And SoFi's been, bringing in the premium customers on credit cards, bringing down those, subpar customers, subprime customers. So they're moving in the right direction, but their credit card business is so small. Again, infancy, acorn, growing into an oak. SoFi has laid the foundation. They got their bank charter, and they did it without any real estate. They did it with a tiny head count. They don't have to pay any rent. They don't have any legacy costs. I don't know why this is so hard for people to understand. You see businesses like Chase, Bank of America, some of these bigger banks. Now, some of the regional banks, yes, they went bad. They, made horrible bets, putting all their money into, zero interest, long-term bond. It just didn't make any sense, the stuff they were putting their money in, Silicon Valley Bank and all that stuff. That's absolutely nothing to do with SoFi. SoFi's business activities, the business activities of a well-managed bank, make a ton of money. It's just structurally the way things work. Banks are just set up to profit off of their consumers. There's a spread. They always profit off their consumers if they have appropriate risk management, which SoFi does. And people keep talking about these defaults. What about the deal they made with Seaport at the end of 2023 to mitigate those risks of default? Nobody talks about that. This is why Anthony Noto is so important, because Anthony Noto is not some wide-eyed founder who's, in love with the company and just talks up the company and is, unrealistic. Anthony Noto is a cold-blooded killer, an industry insider, an insider's insider, multiple stints at Goldman Sachs, CFO of the NFL. This guy is not somebody who comes to a company from inside with an unrealistic view. He sees the entire field. He sees the entire landscape. He sees the risk coming. Remember, when everybody else was saying 4 to 6 rate cuts this year, Noto was saying 2. And everybody's like, oh, he's far too conservative. I was, head of the course. I'm always bullish. I'm always, out there out front saying, go, go, go. Noto's like, no, 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 hold on. Adjusted EBITDA, windbreakers for everybody. But no. Noto was right. That's the point. SoFi is playing chess. Everyone else is playing pocket pool. Noto is hedging against risk. Noto and team and SoFi are going to do well in any economic environment. But when we see rate cuts start to kick in, demand is going to explode. SoFi's wheel strategy is going to explode. You add in business banking, you add in options, you add in some of these things. I mean, I'll take you to my whiteboard. It's an infant bank and an even more infant tech company. Okay, the foundation is there, a bank without real estate, a low headcount, without legacy costs. The tech company Galileo is very unique in that it also is part of a bank within that same company. So they can do things other fintechs can't do. They can do things other software as a service providers for the financial sector cannot do. Can you think of another one-stop shop like Galileo with SoFi Bank? I can't. And, the Garys of the world say, well, Capital One spends billions of dollars on technology. That's the point. That bolsters the case for Galileo, you dumb, value stock carrot. You're like a planted carrot. That's how much you think. I don't understand. If you don't understand it, watch the video with Derek White. Watch Tevis's video on it over on Fundamentals of Investing. Guy looks like a young Elvis, a young Canadian Elvis. Go watch the video. Go read the transcript. If you listen to Derek White and look at his resume and understand his vision, his intelligence, what he brings to the table, and then you look at his team that they've assembled at Galileo, people from Google, people from Apple. I mean, the guy was running, 6,600 branches. He was running a big organization in China. This guy could be the CEO of most companies, of any company. He's just that capable. He has the same haircut as Not a Lurker. By the way, thanks for producing the show and moderating the show to my two able moderators, Jay Money, Not a Lurker, and Alberto Bertie Aviles. But when you talk about this, you listen to the interview, you read the transcript, the vision, you think about where Galileo wants to be in the next 5 and 10 years. If you don't see, I'm not saying they can get it done. I'm not saying they'll be there at the end. They could crash and burn. Okay? But nobody knows that right now. And for the Bears to say this thing's nothing, it's not going anywhere, you just don't know who this guy is, this Derek White. You just don't know who Anthony Noto is. These guys are winners. These guys rise to the top. And I don't see why people, just out of hand discount them and say they just can't do it. It's not a tech company. It's just a bank. It's an idiotic statement. It's an idiotic point of view. Financial services is growing rapidly, and tech, they're saying, is going to start going very, very rapidly. The growth has already been extremely nice, guys, with the status quo. Tech's going to explode. The point's telling us 2025, especially into 2026, huge. Add business banking and lending, add options, add more IPOs, add more private equity opportunities. You're going to see this slope turn into this slope. People who think 15% growth for this company is the limit are idiots. They're so short-sighted. They're growing faster than that now when they shouldn't be growing at all. Everything's lined up against this business the last few years. And they continue to grow, continue to profit, continue to excel, continue to cut costs, continue to become more efficient, continue to cut the head count. How much better do you blood-sucking, vampire, weak, paper-handed, whiny Karen sacks of shit, how much better do you want a management team to execute? How much better do you want them to pivot? What do you want from them? You want blood? Why are you guys losing patience with management? Because of price action? Shorts and mechanics with enough money on a stock with this low of institutional ownership can control the stock price. It's just a matter of money. These shorts and mechanics are well-funded. They have unlimited amounts of other people's money. It does not mean SoFi is flailing or doing poorly fundamentally. It's a dead stock. Well, you're a flatliner, turd. I'm sorry, guys. let's see what happened there at the end of the day. That will be, one of my usual rants. Okay, push down a little at the end, up 2 cents. So, yeah, NASDAQ up nicely on the day. Everything else just up a little bit. You see, Upstart barely up. You see Affirm down. Looks like Coinbase was down. Probably means Bitcoin was down a little bit. Affirm. So, it's right in there with the other growth. So that's kind of the fugazi they play. That's kind of the devil's trick here is they push down on the stock with heavy borrowing, sort of for no reason. So they'll go from the 650 level and they'll go ahead and push down, to 625, 630. So then it looks like it goes back up, but it's really just going to 650. Okay. And if you look at what they did with the stock, arbitrarily, okay, it was trading right in this 680, 685, channel for a little bit. So June 13 to June 14, they just drop it down to 643. And it's basically been there ever since, last 3 weeks, 2.5, 3 weeks. So it hasn't broken down. They stepped it down, guys. I don't know. I don't know if people don't want to see, they don't see what's right in front of them. I mean, if these guys have stock options 2026, 2027, why would they dramatically overstate EPS for 2026? How does that make sense? Because it's going to be very apparent as you go through 2025 if they're just completely out of their minds on their projections for 2026. Now, if they're ahead of the curve and they're exceeding those expectations, that's when Noto is going to start selling and selling hard. Like a guy selling miracle cleaning products at a state fair. Come on up here, man. I'm going to spill a big thing of red wine on you. Well, okay, that's okay. You don't have to touch my boobs. Like, I'm sorry. It was like, those guys are always a little shifty, those state fair salesman guys, kind of guy, sells you a bottle of cleaning solution. All of a sudden, your daughter's pregnant. Oh, what you going to do? Anyway, guys, hello and welcome. Welcome and hello. Sorry about the rant here today. Just had to blow off a little bit of steam. My God, Neo, another stupid stock I have a lot of, not nearly as much as SoFi, but, they just crushed it with deliveries. They were expecting 18,000 deliveries for the month. They had like 21,000, killing it with swap, just killing it all. And everybody's just like, well, okay, we were wrong about everything, but they're still Chinese. Like, it's like Henry Weinstein. Are you Frank Hoffenheimer's? I wish. So some of this stuff just makes no sense. The fundamentals and the share price are just disconnected, and you have to deal with that mentally until they reconnect. Other people are making the argument, well, it doesn't matter what SoFi does. It doesn't matter how much money they earn. It doesn't matter if they hit the 80 cents or $1 EPS in 2026. The stock's just not going to go up. It's just going to go to 4 and be delisted. Listen, professor, that's not how it works. This company just made its first couple of pennies. Doesn't even have a couple of nickels to rub together. Okay? When they start earning serious money, you get into data points that you can use to value the stock. It's not just purely valued on growth, GARP or whatever, or just valued as trash, for a recycling fee. Oh, we're not even going to give SoFi book value. Give it recycling value. That's worth about 10 cents. Fuck yourself. Anyway, guys, I don't know where I was going really with any of this. But the point is, the stock hasn't broken down. I don't think it's going into the fives. Again, you're right. I definitely said I didn't think it was going to break down much below 7, but I think if you look at how much the borrowing has increased since it's below 7, that explains that entire movement in the price action. I don't think any retail investors want to dump this stock at 630, 640. And maybe you caught a couple of people with, some stop loss raids. 62 people in here. Yeah, unsub and unlike. Don't forget to resub and relay. Everybody unsubs. Like, it's so funny. A bunch of people watch my video. People watch for a long, long time. Like, average, most YouTube videos people watch for like 30 seconds or a minute. You idiots watch for like 17 minutes on average or something like that. But then nobody subs. I ask you not to sub, but it's like, I just don't get it. And then people unsub, resub. It's funny. You guys are just toying with me psychologically, but good job keeping me on my toes. But anyway, so we went over the little bit of the short interest. This is another good article. This guy's very straightforward. SoFi, a gateway for growth amidst the downturn, goes over all the pertinent data points, how the stock has been basically hammered for no reason. Pardon me, frog in my throat, ribbit. But the stock market's weakness relates to company's weakness. The lending segment decline came as personal. So the first quarter dropped 2%, 330.5 million in terms of the lending segment revenue. Decline in personal loan origination 11% to 3.3 billion. Likewise, adjusted net revenue remained flat, 325. Of course, this is again for the lending segment. Higher loan balances and substantial net interest margins are helping drive net interest income, which increased 33% to 65.5 million. So this notion that their loan business is dead or in trouble is another complete made up fugazi. The loan business they cut back on by choice to de-risk. You know, when it makes sense to put their foot back on the gas pedal, they will definitely do that. SoFi is always hedging risk. They're always conservative. That's why they're very investable for the institutional investor. And I know they will come in when the time is right. They will flip this company. When that's going to be, I can't say. I don't drive the bus. I don't decide the route. I don't decide how fast the bus goes. The only thing I can decide is when me and my money get on the bus and when me and my money get off the bus. And with me, that's higher, as much as I can make it, you know. Can't always control these things, but you can do your best to pick your entry points and be smart. Even as SoFi Technologies faces challenging in its lending business, it continues to demonstrate significant momentum overall in growth. And that's truth driven by data. That's data-driven investing. Not to steal a line from Deadliest Catch Chris. He's probably up fishing opies. So he's not able to broadcast. So I don't mean to steal his thunder. But say hi to Sig for me. Say hi to Captain Sig Hansen. Anyway, I hope he didn't die. The guy was chain smoking. So many of those Alaska guys must if they don't die in like a fishing accident, they must die of chain smoke. I've never seen people smoke so many cigarettes. You're just freezing cold in the Bering Sea, you know. I guess a cigarette is cold comfort. But anyway, adjusted net revenue. So you guys know all this stuff. Adjusted EBITDA up. He's basically going over, again, what I keep harping on is the myth versus the reality. Look at this member growth. So SoFi had 1 million members just at the beginning of 2020. Here we are 4 years later, 8.1 million members. They 8x their members in 4 years. So stellar second quarter results propel optimistic full year outlook. And again, I encourage you to read this for yourself. Look how much they beat the high end of guidance by. I mean, they beat by 21 million on adjusted net revenue, 24 million, the high end of guidance. I mean, it's crazy. Adjusted EBITDA margin. They beat the high end of guidance by 4%. It says 3, but this shows me 4. GAAP net income. I mean, this was a little bit of a fugazi because, you know, there was a one-time item in there for 60 million. So it was really, you know, more right on the guidance of I think it would have been 30 million. So they did exceed it, but that's kind of a false number based on a one-time credit based on that senior secured note deal they did for 800 million or whatever it was. So from lending leader to financial service powerhouse. And again, I don't want to read through this, guys. I'm really sick of my own voice. I'm going to say hello to a few of you guys and read a few of your comments and get the hell out of here. But I view it as a really solid day. Where did all the volume in the stock go? Where did all the churn go? They just turn it off. That's part of the dead stock narrative. Don't accumulate the stock right now, guys, down the trading desk down the hall. Nudge, nudge, wink, wink. We can't coordinate with you. How's your mom? Anyway, so we can't coordinate with you, but don't buy today. You know, we're shorting today. We sold a ton of calls. We were wrong about everything, the fundamentals, the macro, like the hard landing. We were just wrong. But can you help us out? Can you help us just keep all the volume out of the stock, hold it down till retarders lose hope and give up, go home with the tail betwixt their legs and hang their heads in shame? So according to financial advisor, personal financial expert Michael Dinich, the great Michael Dinich, touchdown Michael Dinich, SoFi's transformation into a comprehensive financial services company has been a crucial strategy, significantly boosting its revenue and profitability. Pardon me. This success is further supported by enhanced contribution margins achieved through strategic client onboarding and revenue diversification. Finally, impressive results were driven mainly by high interest rate environment. SoFi offers 33 times average national average interest rate, higher deposits, member spending levels in SoFi Money. Not Monet. That's money. That's a typo. More excellent assets under monetization. And that reminds me of that Larry David episode when instead of beloved aunt, it made a typo from an A to a C. It's like, beloved Larry. Everybody always hates Larry. Anyway, but the whole family hated him because he was Jewish also. Didn't really, but it was a funny episode. Of course, Cheryl's family is Chris, I think, Protestant or something. So don't want to really like the new ones. The old curves are great. Anyway, valuation, despite dropping over 33%, SoFi price to earnings 71. That's a little bit of a misnomer as they just started earning their first thing. Trades at a price sales multiple of just 2.8, which is cheap compared to its peers. For instance, Robinhood trades at a ratio of 9.5. Upstart 3.6. Affirm 3.7. And these Affirm, they don't make money. They lose a ton of money. Why do they trade at a better multiple than SoFi? It doesn't make any sense. Despite the valuation, SoFi Technologies continue to fire from all angles, supported by robust revenue and earnings growth. Revenue growth of more than 30% is rated justifies a high valuation compared to other banks. Takeaway, SoFi has adeptly navigated the financial services landscape, shifting from student loan refinance to personal lending amid the pandemic, which boosted its loan origination from $2.6 billion to $13.8 billion. Despite a stock decline this year, SoFi offers a valuable opportunity for long-term investors due to strategic shifts in robust fundamentals with significant net income gains, expanding member product base. SoFi is poised for a rebound, making the current market downturn potentially overblown reaction to long-term growth potential. This article for pretty good house. Brian Hunter, I need oxygen, Brian Hunter. Who wants to give me mouth to mouth? I just had a what did I have? Some type of Mexican food. I can't remember. Some type of empanada. Probably not great for the breath. We got chipotle sauce, onions, jalapenos, about 5 cups of hot sauce. Probably not good for anybody. Anyway, Alberto, good to see you. Let's go. He's blocking everybody. Flesh infection. I'm going to start from the bottom because I don't want to read all this crap. What's up, Matt Flo? I always see Matt Flo. His name just stands out. What's up? The hammer blows. The shorts come in 90-day intervals with quarter-end results. Next one's a bit. I mean, the thing goes way up and it goes way down, Grit and Grunt. When it's going to do that, we don't know. And just when we expect we know the pattern, they're probably going to change it. It's probably going to throw a crazy Ivan at us. But problem here, I'm all in, 750 average. The hate is strong with this one. What's going on, guys? Danny rides Dr. Chief Electric Mayhem bus short crazy. That may be so. I have a very, very short bus. The ghost, don't tell Danny Gills you did. Hates that. Three buses came along once. Sure. But yeah, I mean, guys, we just don't know what's going to happen. I mean, people are like, oh, you said it would hold 7. You're such a fat asshole. I'm like, okay. I mean, I was buying when it was down in the 4s. You know, it went up almost to 30. So I know it can go up and down. I'm not an idiot. I'm just looking at the chart, and I mean, 7 looked really good for a really long time. I think it's just very premature to say, that the stock's broken down. I mean, there's 7 here, right about here. And yes, it's below 7, but these isn't 2 red candles dropped the stock from 711 to 642 in 2 days for no reason. So what does that prove? It just proves they're willing to just borrow a ton of shares, stop people out at 650 and churn the stock and accumulate. If you look at these last few days, guys, I mean, there is a lot of big green candles in here. There's a lot of accumulation. Now, of course, when they drop it, you're going to see big red candles, but when they churn it, there's more green candles than red candles when they're churning it sideways. You can fix the price. You can drive a price down without selling that many shares by fixing the bid and the ask at certain intervals at certain times. It's not that hard to do. Of course, it's illegal, but, that never stopped anybody. Anyway, guys, I wanted to keep this one under 30 minutes. I got other work to do, and, I'm just really sick of talking to you, but not that much happened today. Let me get you just a final check of the live short interest. So shares down 1.9, always rating reiterated by Needham. Yeah, there was a reiteration by Needham, $10 and a buy, which was the same as they had on. But it's good to see, and they actually do their homework. They actually put out a note It's not like that stupid fucking Oppenheimer note they put out on their strong sell report the other day. It's like, hey, we were a buy on the stock when it was 23 and 24. We were telling you to buy. And now that they've executed incredibly well for the last 2.5 years, we're a strong sell on the stock at 6. Don't ask me how it makes any sense, guys. Yeah, 3.4 million down on the day. So returning some shares apparently, but I expect that to spike back up after hours so they can play more games with the stock tomorrow. They clearly don't want to lose Max Payne at 650. So, it's all hands on deck for these shorts. And when you're a short wing loser, you need everybody in get, as these SoFi shorts clearly are. Guys, it's Un Poco Moss. My name's Danny Deals for Nautilurker, J Money, Alberto Bertiavles, Hurricane Lopez, Stock Karen, and the rest of the team here, which largely does not exist. Hope you guys have a great day. It's Un Poco Moss. I hate you guys. Good luck to all.